Joining us now is Jefferies Chief Market Strategist David Zervos. David, good to see you. So you've told us in the past you believe the Fed is already political. You've seen what's been happening in the news. You know what President Trump wants. My question to you is, why shouldn't we just let U.S. presidents set interest rates directly?
Well, I think we've learned that having too much power in the executive branch with a shorter horizon can lead to some trouble. We've seen it before. So we've tried to give some independence to our central banks, and that's the nature of central banking around the globe. There's an equilibrium, but it's a push and pull. And John, I think if the central bank takes too much of an opposing view to the current administration, it can be quite a negative on the economy. So I think we're looking for balance. And I think this president is pointing out that there may be some imbalances, maybe the September move of 50 basis points, certainly what happened in 2018 with Chair Powell going quite aggressively against the agenda and many prolific speakers egging him on, like his old colleague Bill Dudley asking him to create a recession, to oust Trump. We know the institution's political. We know that the political forces, as Christine Lagarde said very accurately, political forces shape monetary policy. It's just a question of finding a balance between the short-term gains that maybe an administration might want and sort of long-term good policy that comes from focusing on price stability and full employment.
Well, David, this is a Fed chair who President Trump appointed. So if he can fire Fed chairs at will and replace them with whom he chooses, how far are we from letting presidents set interest rates?
Well, I think we're pretty far. At the end of the day, when the president appoints a Supreme Court justice, he doesn't sit there in a gown and rule on every case. And I think of the Fed very much like I think of the Supreme Court. It's 14-year terms. You're putting someone in there who has a political agenda, who has a political set of beliefs, and you're hoping that they coincide with the broad contours of what the administration is looking for. And I think when the president did put Jay Powell in the first time, he thought that. And I think based on his experience in 2018 and 2019, he probably regrets that. And I think he's been pushing back on Chair Powell ever since. I mean, some of the wording he used back in 18 and 19 was far more aggressive than the Mr. Too Late or the major loser stuff. He used to call him a bonehead, and I think he was comparing him to an enemy of the state like Xi Jinping. I mean, for me, it's toned down a little bit. I'm not sure why everybody's getting so hot and bothered. We've seen this movie over and over again from this president.
David, I'm not sure folks are fully appreciating or talking enough about just how large the U.S. debt load is, how much debt is coming due here over these next couple years, how much the U.S. is spending to service it, and just how much higher rates currently are than what's in the government's own forecast to do that as it looks to craft spending and budgets here over these next couple of years. How much is that factoring into perhaps some of the rhetoric and some of the debate that is coming from President Trump and the administration around this topic right now?
Well, Morgan, I think Secretary Bessent has been very clear that he wants to attack that problem. He's got his 3-3-3 plan. And I would have actually thought Chair Powell would be very sympathetic to the administration's push toward fiscal parsimony. But it does seem like there's a clash. And they want a monetary cushion when they go through rebalancing on the fiscal side and rebalancing on the trade side. And they're not really getting that monetary cushion. It seems a little less cooperative than I would have thought, and probably the administration thinks. And I think that's why the rhetoric has amped up. And I would expect it to keep amping up if the confrontation and the aggressiveness on monetary policy and sticking a little too restrictive for a little too long, whatever this Mr. Too Late means, starts to get in the way of trade negotiations or fiscal reductions and reducing the size of the federal footprint, which you rightly point out has gotten out of control and is a worry as we move forward.
So, David, quickly, how important, how powerful is the bond market right now, especially as everybody talks about this Sell America trade?
You know, it's powerful, but, you know, Morgan, we wrote a piece last week talking about twists in the market and ways that the administration can kind of usurp some of the power that the monetary authorities have, and also some of the power that our foreign holders of Treasury securities have. The Treasury can do buybacks. The Treasury can twist and shout, but twist more about the way they want the debt maturity structure to move forward. And I think they have a lot of power to make sure that dislocations in the bond market don't metastasize. They would hope, I think, that the Fed would help them, but I think the Treasury can do it really on their own if they really need to.